think of India's economy as this massive, powerful vehicle. What's the engine that makes it all go? Well, it's the banking system. And today, we're going to pop the hood, take a look inside, and figure out just what makes this engine tick.
So let's start with the absolute basics. What even is banking? According to the law in India, it really boils down to something pretty simple. An organization takes your money for safekeeping, lets you take it out whenever you want, and in the meantime, it loans that money out to other people. That's it. This simple cycle is what fuels everything.
Okay, but that sounds way too simple, right? How did we get from that basic idea to the incredible system we have today? With instant UPI payments, huge corporate loans, and a bank in pretty much every town. How did that happen?
Well, here's our roadmap. We're going to start with the basics of what a bank does, then we'll travel back to the very beginning of banking in India, hit the super important nationalization era, pit public and private banks against each other, see how banking finally reached the villages, and then wrap up with a look at the system as it stands right now.
So let's kick things off with Section 1. What exactly is a bank? Let's lay the foundation. When you really break it down, a bank's job is split in two. You've got the primary functions, this is the main event, taking our deposits and giving out loans. That's the heart of it. Everything else, that's a secondary function. Think of them as helpful extras, like the bank acting as your agent to pay a bill for you, or utility stuff, like giving you a safe deposit box. All of it just supports that core mission of moving money around. All right, now let's jump in our time machine and see how all this even started. Section 2, India's banking origins. This timeline just lays it all out, doesn't it? It all kicks off way back in 1683. Then, fast forward a couple centuries to 1935, and we get the big boss, the Reserve Bank of India, or the RBI. 20 years later, in 55, a major bank gets a new name and becomes the giant we all know, the State Bank of India. And then, the real game changers, 1969 and 1980, the years of nationalization. And that brings us to maybe the single most important chapter in this entire story. Section 3, the nationalization era. This is when the government decided to grab the steering wheel. So why did they do it? Well, before this, most private banks were focused on big cities and big industries. The government felt that just wasn't serving the whole country. So the idea was to completely change the engine's purpose, move it away from just making profits and point it towards social good, making sure everyone, even in the smallest village, could have a bank account. And just like that, the whole landscape was redrawn. This one policy created this huge category of public sector banks, and as you can see, they became a massive part of the whole commercial banks world. For decades, these government-owned banks were the absolute backbone of the entire Indian financial system. Which, of course, sets up the big rivalry that still defines Indian banking today. So let's get into Section 4, public versus private banks. It's really a tale of two completely different goals. This chart just lays out the differences so clearly, and they go deep. I mean, look at the main objective. Public sector banks are all about social welfare. Private sector banks, they're focused on profit. And that one difference changes everything, from technology to customer service to how many branches they have out in the countryside. But hey, if you're going to remember just one thing, let it be this. Public sector banks, owned by the government, mission is social good. Private sector banks, owned by shareholders, mission is profit. It's two totally different philosophies powering two different kinds of engines. Now, for a long time, the public sector was king. But then, after 1993, the doors opened up again for new private banks. And that just injected a massive dose of competition and new ideas into the system. This is really what lit the fire under all the digital banking and new tech that we all use every single day. But what about the parts of India that even the big commercial banks had trouble reaching? Well, for that, you need a different kind of engine altogether. Welcome to Section 5, Reaching Rural India. So the government saw a very specific problem. Rural areas were being left behind. And in 1975, they came up with a very specific solution, Regional Rural Banks, or RRBs. These banks were custom-built from the ground up to serve small farmers, farm laborers, and local artists. They fundamentally changed the game for finance in the countryside. And check out how they're owned. It's actually pretty clever. It's a three-way split. The central government holds the biggest piece, 50%, for national oversight.
Then, a big sponsor bank owns 35%, bringing in all the banking know-how. And the local state government has the last 15% to make sure it fits the local needs.
And this shows you that the system is never finished. It's always getting a tune-up. The government has been actively merging these RRBs to make them stronger and more efficient. In fact, recently they consolidated them all the way down from 43 different banks to just 28, creating bigger, more powerful institutions to serve rural India.
Now, there's one more crucial case to this rural puzzle: cooperative banks. What makes them so unique is that they're based on, well, cooperation. The people who borrow money are also the owners of the bank. It's a totally different model, banking by the community for the community. And you find them everywhere, in cities and villages. Okay, so we've seen all the parts, we've seen the history. Let's put it all together and look at this modern machine as it runs today. Section 6, the system today. In any giant machine, some parts are so important that if they break, the whole thing grinds to a halt. The RBI calls these domestic systemically important banks, but you can just think of them as too big to fail. Any bank that holds assets worth more than 2% of India's entire GDP gets this label. Right now, there are three: SBI, HDFC Bank, and ICICI Bank. These are the absolute pillars holding everything up. So here's the bottom line. The Indian banking system isn't just one thing. It's this incredible living network of public sector banks chasing social goals, private banks chasing profits, foreign banks bringing in global cash, specialized rural banks, and community-run cooperative banks. And the master mechanic keeping this whole complicated engine running smoothly? That's the Reserve Bank of India. We've seen this engine evolve from something super simple to the complex machine we have today. But it's not done changing, not even close. With all these new digital-only neobanks popping up, the very idea of what a bank is changing right before our eyes. Which leaves us with one big question. What's the next upgrade for this powerful economic engine going to look like?